you are well prepared for a full range of Brexit outcomes. Let's just talk about that first. Talk me through what you mean by the fact you're well prepared for a full range of Brexit outcomes.
Well, we knew about Brexit in 2015. Yeah. We've had plenty of time to prepare, so rest assured we're well prepared. If we've got to pay pensions into Spain or anywhere across Europe, well prepared. Life insurance payments, exactly the same. We've been, neither stayers or leavers. We've been doers for the last few years, and it's been incredibly successful for us, investing not just here but in America and elsewhere. So, these results are a sort of vindication of our strategy, which is all about leaning in, and it's been a terrific time for us.
So, Nigel, good morning to you. Good to see you. In terms of then the rhetoric that's been coming from this administration under Boris Johnson, schools, roads, capex, hospitals, building, etc., is this music to your investment ears? I'm not necessarily focused on your political ears, but on your investment ears. Is this good news if this comes to bear, and this is what this administration delivers?
Yes, we've always argued that we've massively underinvested in infrastructure in Britain for many, many years. And we've, if you look at our direct investments over the last year, they're up 36% to £22 billion. That's a huge amount that we've been investing in the UK. We're very happy to be finally joined by the government, believing that actually, our schools, our hospitals, our roads, our rail system all need upgrading. We can self-determine our success by investing more in housing, in roads, in transportation, in health facilities, and that's going to help the people of Britain have a better life.
Nigel, can we talk about the fact that we keep discussing lower for longer with central banks? I mean, we've been talking about how much negative yielding debt is out there. We sit on $15 trillion at the moment. So talk to me about how you're working around this issue of lower for longer and negative rates.
Well, by investing in the real economy, we're investing in real assets, creating real jobs, which is resulting in real wage increases, which are all great societal outcomes. And we've got this huge infrastructure deficit in the UK. We've been leaning into it for year after year after year. And when interest rates are so low, history will judge us really badly if all we do is invest in assets with negative nominal yield. That's a tragedy for not just the UK economy, but for the global economy. And we all should be investing in real assets and creating real jobs.
And Nigel, and that has been your mantra for as long as you've come in and discussed your results with us, and we get that. Stephen Major, our last guest for the last hour, said that the world needs to start to realise that the return in a negative yielding world is not something which is toxic. If you look at the overall return, for example, on Austrian 100-year bonds, total return of nigh on 70%. Is that just fundamentally against everything that you believe in, or do you think there's any credence in that argument?
No, we believe investing in real assets and driving real economic growth. And, there's so much to do. If you think in the first 6 months of this year, we've set 3 corporate records in the UK. We've entered into the largest pension risk transfer deal ever at £4.6 billion, and there's bigger ones to do out there. We've entered into the largest city deal ever with Oxford, £4 billion. Our biggest fund management deal ever, $50 billion. If you get out there and invest in the real economy, you're going to get a better outcome than investing in negative nominal yielding bonds. It's 101 economics and finance.
I want to talk about actually the Oxford deal. So this residential commercial development in Oxford. Does Brexit not make you nervous in terms of the hit there could be to the property market?
Not in the slightest.
Okay.
We've had nothing but doom and gloom about stuff. We need to be building more, not less, in the UK. Who thinks we haven't got a housing deficit? Nobody. Who thinks Oxford doesn't need better science labs, better facilities for its graduate students, or the workhorses of the modern university? And that's what they've been lacking for the last 20 or 30 years. So there's, not only can we do that in Oxford, we can do in many other cities right across the UK.
And I tell you what, they could do with a few new student housing in the north of Ireland as well, and in the Republic of Ireland. I know, I lived in some of it.
We're coming to Belfast.
I want to talk about cable. 120. We're coming to Belfast. Good. Yeah, I'll hook you up with the new Chancellor at Queen's, and you can do it. Good lad. Talk to me about cable. 120.158 is where we are. Nigel, people are talking about hard Brexit and this currency could dump to 110, possibly parity. Is that just market babble, or do you think that the currency would take that kind of strain on a hard Brexit? What's your call?
No, I think we're all recognising that the sterling will probably weaken on a hard Brexit. You know, we saw a lot of things happen when the vote happened. You know, we saw a weakening of sterling, and we're expecting the same thing to happen in the UK, and it's something again that we've prepared for. You know, all these scenarios we've had many years. To be fair to the Bank of England and our regulators, they've done a very, very, very good job of preparing the financial institutions in Britain to be prepared for Brexit. And so hats off to Mark Carney and Sam Woods and people like that who've just done a really, really good job.
Can I talk about life expectancy,
yes.
Nigel? Because what you've been doing, as I understand, for the past 2 years, you've been releasing more money from reserves due to the fact that gains in life expectancy are slowing. How long is this trend likely to go on for, and are you going to keep managing it in the same way?
Yeah, we didn't release anything in the first half, actually. Actually, we've released 3 different years over the last 10 years, and we probably will in the second half. It's very sad that people are not living as long or as healthy as we expected people to do, and that's for all sorts of different socio-economic reasons. And what we've done with that money, in effect, is reinvested in the UK economy to help build a better society and better infrastructure, which will have the long-term effect, we think, of people living longer.